Welcome to the Daily Business and Finance Show. Microsoft soars with strong Q1 results, Alphabet stumbles on disappointing cloud revenue, Apple teases exciting new products coming soon, earnings hits and misses shake up market reactions. NVIDIA implements China curb following update from Biden, Nikola wins $165 million in arbitration against founder, Agree Realty and NextEra Energy beat Q3 expectations while Texas Instruments falls short. Stay tuned after the short ad break to get all the details on these top headlines. Microsoft shares surged over 4.5% in after-hours trading as the company reported better-than-expected fiscal first-quarter results. Revenue from its intelligent cloud unit reached $24.26 billion, while its productivity unit generated $18.59 billion. Cloud services revenue, primarily driven by Azure, grew 29%. Amazon shares also rose due to these strong cloud results. Microsoft search and news advertising revenue increased by 10%. The company returned $9.1 billion to shareholders through buybacks and dividends during the period.
Alphabet, the parent company of Google, experienced a decline in its stock during after-hours trading despite surpassing earnings expectations. The company's revenues demonstrated a notable growth of 11% to reach $76.69 billion, marking the strongest revenue increase in 5 quarters. However, Google's cloud division did not achieve the anticipated level of growth. On a positive note, both operating income and net income exhibited an increase compared to the previous year. In addition to these financial updates, Alphabet revealed its intentions to optimize office space on a global scale. While revenue from different segments displayed mixed results, it is worth mentioning that traffic acquisition costs witnessed an upward trend.
Apple has revealed plans to introduce fresh offerings on October 30th, shortly before its fiscal Q4 financial results are released. There is speculation that the renowned technology company might showcase new Mac machines, potentially including a 24-inch iMac and upgraded MacBook Pro models. Apple's earnings report is set for November 2nd, with analysts projecting earnings of $1.39 per share on $89.31 billion in revenue.
Earnings misses are having a greater impact on investors compared to beats, resulting in a challenging environment, as stated by Josh Brown, CEO of Ritholtz Wealth Management. The S&P 500's forward P/E ratio currently stands at 17.7, which is below the 5-year average of 18.7 and consistent with the 10-year average. However, Q3 earnings have generally been negative except for tech giants like Apple and Microsoft, which experienced growth in both revenue and earnings. Alphabet Inc. has demonstrated robust growth this year with high-quality earnings per share improvement. Amazon.com is anticipated to achieve significant revenue and earnings per share growth due to reduced spending.
NVIDIA has recently declared that the sale of its artificial intelligence-focused chips to China is now restricted due to an update from the Biden administration. These export controls specifically target products with a total processing performance of 4,800 or higher. However, NVIDIA anticipates minimal impact on its financial outcomes as a result of this restriction. As a consequence, NVIDIA shares experienced a 0.7% increase during early trading on Tuesday.
Nikola Corporation has recently been awarded approximately $165 million plus interest in an arbitration proceeding involving its founder and former executive chairman, Trevor Milton. The company sought reimbursement for costs and damages associated with government investigations. Additionally, Nikola intends to recover attorneys' fees. It is worth noting that in July 2021, Milton was indicted on charges of criminal fraud for providing false information about the company's operations. As a result of these developments, shares of Nikola experienced a 2.15% increase in pre-market trading and reached a value of 95 cents per share. This rise in stock price is being closely monitored due to heightened options trading volume surrounding the company's shares.
Agree Realty has reported its third-quarter funds from operations of $1. This exceeded expectations by $0.1. The company's revenue for the quarter was $136.81 million, showing a year-over-year growth of 24.3%, surpassing estimates by $1.84 million. During this period, Agree Realty invested approximately $411 million in 98 retail net lease properties and successfully completed 8 development projects valued at over $41 million in committed capital. However, the net income per share experienced a decrease of 12.4% to reach 41 cents, while core FFO per share increased by 2.1% to reach 99 cents. In addition to these financial results, Agree Realty announced a monthly dividend increase of 2.9%. Furthermore, they closed on a term loan and sold shares, resulting in net proceeds of around $87 million and settled outstanding equity for approximately $290 million. Despite these transactions, Agree Realty maintains a strong balance sheet with a net debt to recurring EBITDA ratio of 4.5 times.
Shares of Texas Instruments fell by approximately 3.5% during after-hours trading. This decline was a result of the company's disappointing third-quarter financial results and guidance. Texas Instruments, known for its analog semiconductor products, anticipates fourth-quarter sales to range between $3.93 billion and $4.27 billion. Unfortunately, this falls short of analysts' expectations of $4.49 billion. The underperformance can be attributed to weakness in the industrial sector. Looking ahead, Texas Instruments forecasts fourth-quarter earnings per share to be between $1.35 and $1.57, which is lower than the estimated $1.76 per share. Following this update from Texas Instruments, other companies in the industry also experienced declines in their stock prices, including Analog Devices and ON Semiconductor.
NextEra Energy experienced a significant surge in its stock price during pre-market trading on Tuesday. This surge was driven by the company's impressive third-quarter earnings report, which surpassed analyst expectations. Despite a decrease in net income compared to the previous year, NextEra Energy managed to achieve adjusted earnings per share of 94 cents, surpassing the consensus estimate from Wall Street. The company's success can be attributed to its two main business segments, Florida Power and Light Regulated Utilities, and NextEra Energy Resources, which focuses on clean energy solutions. Both of these divisions contributed to the growth in revenues during Q3. Furthermore, NextEra Energy provided positive guidance for its financial performance in 2023 and 2024. The company expects continued growth in adjusted earnings per share and dividends per share during these years. Thank you for joining us on today's episode of the Daily Business and Finance Show. Stay informed, stay inspired, and we'll catch you next time. I'm Montgomery Jones.
And I'm Amalia Dupre. Goodbye for now, until we meet again tomorrow.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.